Hey everybody, how are you? Welcome to the very first episode of the Homebuyer School. So, what is the Homebuyer School? The Homebuyer School is a place where people are going to come here to learn about what it's like to purchase a home. We're going to talk about things that are related to finance, real estate, economy, budgeting, credit, everything that involves steps to buy a home. We're going to touch base. We have a lot of experience in this area, over 20 years of helping people become homeowners, and we're going to take our experience and the experience of our friends and our partners, and we're going to bring it to the home buyer school. And today we're actually going to talk about the very first topic, which is called the mortgage pre-qualification. We're going to talk about what does it mean to be pre-qualified for a mortgage. So I'm going to go ahead and start, and I'm going to share my screen with you so we can follow along with these bullets. And here we go. So what is a mortgage pre-qualification, right? When you are talking to a real estate agent, one of the first questions they're going to ask you is, are you pre-qualified for a mortgage, or do you already have a pre-approval or a pre-qualification? There's a difference between a pre-approval and a pre-qualification. Most people are going to get pre-qualified, right? Pre-qualified means that somebody, a mortgage person or a mortgage bank or a mortgage banker or a mortgage broker, has looked at their income, their assets, their credit, and has given them the green light, telling them that, you know what, you are pre-qualified for a certain amount, and then they can go out and do that. The key word here is pre. That means it's prior to, right? Prior to getting the mortgage, prior to finding a home, prior to looking for a home. You want to be able to get that pre-qualification there. So it's an initial step, right? It's the first step in the buying process. It's going to give you an estimate of how much you may be able to borrow. A lot of people don't know how much they want to buy. They say, well, I want to buy a home for 500,000, but they have no idea if they are in a position to do that. The other thing too is, because we're going to be looking at the financial information that they provide, that you provide, like income, assets, etc. We're going to be able to make really clear determinations of how much of a house can you really purchase and afford. Now, a pre-qualification is a general idea. It is not going to be down to the penny, because at this point you don't have a locked-in interest rate, or you don't know exactly how much the tax is or the insurance is going to be on that particular home that you're thinking about buying, but it's going to give you an idea, right? So you can start thinking in terms of, I have a pre-qualification, I can start looking at some of those houses. Now, why should you be pre-qualified? A lot of people think they don't need to be. They go, oh, no, I have great credit and have a good job. I don't want to do that. I don't need to do that. No, no, no. Why should you get pre-qualified? Well, first of all, because you're going to be able to set a realistic budget. You're going to be able to be realistic about how much of a house can you afford, and that way you can start house hunting. It also shows that you're a serious buyer. If you're making an offer, or if you're going to houses, open houses, or you're talking to agents and you have not been pre-qualified, they're going to wonder, well, is this person even really serious about it? He hasn't even taken the time to go see how much he can pre-qualify for. So it shows that as well. And of course, it also helps you with your financial planning. It gives you a picture of what kind of a mortgage payment can you have. It is also give you an idea what type of loan can you get. Can you get a loan with higher down payment or lower down payment? Is the credit score you have going to be sufficient or not? So those are all the things that we're going to be looking at a pre-qualification. Now, let's go here to number 3. Who's going to do your pre-qualification? How do you find the best lender, right? And when we talk about best lender, we're not talking about the best in the world. We're talking about the best for you, right? Every person is unique. Some people need a lot of hand-holding. Some people are very experienced and they need someone that can just get the job done. Vast majority of people, when they're buying their first home, they need help. They need help understanding concepts and somebody to walk them through it. So the best lender is not the best lender in the world. It's the best lender for you and your situation. Now, we recommend that you research multiple lenders. Of course, we talk about banks and credit unions, mortgage brokers, and compare options. I put here, pay close attention to a mortgage broker. I'm a mortgage broker myself. Now, why is that? Well, mortgage brokers actually shop around multiple banks for you. That's the one thing people don't understand, is that they think Wells Fargo is a mortgage broker, or Quicken is a mortgage broker. No, a mortgage broker is an independent broker that actually does the shopping for you. It's not going to cost you more. In some cases, it's going to cost you less. So if you don't have a lot of time to shop and you don't want to talk to a bank and a credit union and different people, then your best bet is to go talk to a mortgage broker, because the mortgage broker is going to do all the shopping for you with one click of a button. Now, another thing you want to do is look at reviews and ratings. This is extremely important. It baffles me that I have colleagues that have been in business 10, 15 years, and when you Google their name, when you Google their company, there's zero information there, right? Why is it that nobody knows what their rating is, right? We pride ourselves on being reviewed, and we have a 5-star reviews, and not just a couple, because we make an effort to make sure that people understand reviews are extremely important. But you definitely want to do that. The other thing you want to do is, you don't want to necessarily review or go look for the reviews of the company as much as you want to look for the reviews of the loan officer. For example, I'm the owner of First West Financial, but I have 20 other loan officers. As a company, we have reviews, but I have reviews personally as a loan officer, and that's the review that you want to know. You want to know about that particular loan officer. Is he responsive? Do they have a good track record? That is the reason why reviews are extremely important. And you know what? Ask questions. Don't hesitate to ask the lender about fees, loan types, customers. No one's going to take offense. I see people sometimes ask me a question about, well, how do you get paid? Or whatever. And I'll be honest with you, it's almost like they're hesitant. I have no problem. You ask me those questions. You ask me, I will respond. I will tell you exactly how I'll get paid, exactly how my compensation is, exactly how my company gets into operations. We answer all the questions because we know that information is power. Now, number 4, we're getting into number 4 right here. What paperwork are you going to need? That is a very, very interesting question. It used to be pretty standard: taxes, W-2s, bank statements, ID, etc. Nowadays is different, depending on your situation. Some people that are self-employed are going to need taxes. Some people that are self-employed don't need anything because of the type of loan. Bank statements. If you are an employee, a regular W-2 employee, and you're doing a regular loan, FHA, VA, conventional, chances are that you're going to need the exact standard thing, which is your pay stubs, your W-2s. The lender is going to tell you what you need. But it baffles me too that sometimes we talk to people who want to get pre-qualified, and they said, hey, I want to get an approval, a pre-qualification. And I said, well, give me 2 pay stubs and a W. Well, I don't know where they're at. And it takes them days to find the W-2, find the pay stub. If you think you're going to be buying a house soon, start doing that work. Check to see where your W-2s are. Typically, you need 2 years of that. Make sure that you go in and print your bank statements. Don't take a picture of your balance. That's not going to do it. You need the bank statements, right? Your pay stubs. I had someone show me a picture from their phone showing that, hey, this is what I got deposited. That's not your pay stub. Your pay stub is the one that has all the deductions and the W-2s and all that. So you're going to need all of that, right? Income information, assets, your bank statements. We talked about that. Debt details. So in some cases, we're going to run your credit. In other cases, we're going to run a soft pull pre-qualification, which is just a light qualification, doesn't affect your credit. But we definitely need to know what your debt situation is going to be. What kind of payments are you making? Are you paying child support? Are you paying alimony? Are you receiving alimony or child support? And of course, employment, right? Any information that you think is relevant, you need to share that. You never want to keep that from someone. We talk to people who are in the middle of buying a house or getting qualified, and then they go, oh, I forgot to tell you that I'm thinking about changing jobs. Or, oh, I forgot to tell you that they just reduced my hours. Those things are extremely important for a lender to know, because that pre-qualification is going to encompass all of those things, and you need to be able to share that with us. So that's the kind of paperwork that you're going to need. Your loan officer is actually going to tell you exactly what you need. Now, how does credit factor in? Well, credit is a lot about qualifications, right? There is no question about the fact that the people with better credit are going to get better loans. It's just that simple. Better interest rates. But it doesn't mean that just because you may have less than perfect scores or less than perfect credit, that means that you don't qualify. For example, FHA is very forgiving. I have someone in escrow right now with a 580, 585, no problem. They're still going to get a good rate. Conventional tends to be a little tougher, but credit has a lot to do with what kind of mortgage you're going to get. Most likely, the lender is going to check your credit, whether it's a soft pull or a full report. The score is important. And then, of course, there are tips to get better. I don't want you to take credit into your own hands, but typically, keeping your debt smaller, not having a lot of inquiries, not disputing things, no collections, that's going to help. One of the things that I want to caution you is that if you're thinking about buying a home and you're thinking, you know what, I got to fix my credit, don't. Talk to your lender first. Have them run that pre-qualification credit soft pull. They're going to tell you what are some of the things that you can do to improve. Don't try to figure it out. This morning, I spoke to a lady and she says, I don't want you to run my credit because I'm in the middle of fixing it. And I go, okay, how are you fixing that? To me, it's a little bit like, you know what, I'm doing my own dental work or I'm fixing the electrical in my house. I'm not an electrician. I don't want to get electrocuted. But so what does that mean? This person was actually paying off collections, and I told her to immediately stop. Paying off collections typically ruins your credit worse, doesn't help you. Doesn't ruin it, but it makes it tougher, right? I have another person says, well, I'm paying everything off. Well, hold on, don't do that. That may affect your scores. Most lenders like me have what we call a credit simulator. So if you're dealing with a broker, ask them, do you have a credit simulator? And can you use that credit simulator to tell me what are some of the things that I need to do? So a couple of weeks ago, we were working with some buyers who had about $10,000 to pay things off. And they didn't know which credit cards to pay off. So I ran the simulator and I told them, this is how those $10,000 can help you. This is what each credit card should have, and this is what the score is going to be. It predicts the score before it happens. That's a credit simulator, but credit is extremely important. A lot of misconceptions about credit. Here at the Home Buyer School, we're going to be talking a lot about credit in the upcoming weeks. Now, how much am I going to be pre-qualified, right? This is the question that everybody wants to know. How much money am I going to get? Well, the answer is with the lender. The lender uses a system of pre-qualification, typically an electronic system where we plug in your debt, your income, your assets, and the computer tells us, right? This is where it goes into the red, you're way over. I tell people all the time, and I caution them to not get pre-qualified for a purchase price. You want to get pre-qualified for a payment. And here's why. If I say to you that you're pre-qualified for a $500,000 mortgage, and you go out and I pre-qualify you for a single family home with no HOA, and you go out and make an offer on a $500,000 condo with a $500 HOA, you're no longer going to qualify for that because the HOA is going to bring you down. So even though we're still going to give you an amount, you want to know what that payment is. So when you're looking at homes, if there's an HOA, if there's mellow roofs, if there's flood insurance, that's going to change the amount that you qualify for. I can tell you that every single home that we visit is different. We calculated using income, debts, credit scores. That's fine, but it's really an estimate. That's all it is. We're estimating, right? Recently, we were talking to someone that was looking at a particular community right here, and all they were looking at is the price. They said, well, I was told that I could qualify for 400,000. This particular home has HOA, flood insurance, and additional taxes like mellow roofs and special assessments. There's not a chance that that person's going to qualify for that mortgage because they didn't take that into account. So work with a broker that is accessible to you. If you're going to go out and look at homes on a Thursday or Friday, reach out to them and say, hey, these are the homes that I'm going to look at. Can you help me figure out whether I still qualify for those? Because they may be a little different. They may have, mellow roofs or HOAs or flood insurance or whatever. Extremely important that you do that. So that's really the meat and potatoes on this qualification. Usually, once you get pre-qualified, that qualification is good for 60, 90 days. As long as your situation doesn't change, you can continue. But if anything changes and you haven't bought a house, reach out to your lender and say, hey, I got new pay stubs, I got a raise, or I got transfer, or I had to use some of my assets. Can you requalify me again? And they usually do. The important thing is that you work with someone that you trust. If you're working with a lender and something inside tells you that this is uncomfortable, he's not, I don't understand, or he's not explaining things, or you don't feel right, follow that instinct and talk to someone else. I'm be honest with you. You need to be able to be extremely comfortable. This is the largest purchase in your life. Think about it. I take it very seriously. I've been doing this 21 years. Every time I help someone buy a home, it is probably the largest purchase in their lives, and I get to be a part of it. It's an honor to me, but it's also a responsibility. I want to make sure that they are educated, that they answer their questions, that they are comfortable doing the things that they need to be doing in order to proceed, because there's a lot of money at stake. So I hope this information was useful to you. Please do me a favor, hit subscribe, share this with someone else. We would love to be able to get the word out that there's a place where people can learn about buying a home from someone that's been doing this a long time. Have a great, phenomenal rest of the day. I will talk to you soon.